All right, good afternoon, everyone, and thank you for joining us today for Stable Stories. Stable Stories is a video series by the Eco Foundation that explores the behind-the-scenes experiences, learnings, and insights of builders and today investors pioneering in the stablecoin industry. So today we have Sam Broner from a16z Crypto. Sam, thank you so much for coming.
And thank you for including me as an investor, even though I'm just an investor, to talk about stables today. I'm pretty excited to be
That's
here.
right. I mean, we're all building in the space in different ways. So very excited to hear this unique perspective. I think our first investor on Stable Stories. So a great milestone indeed.
Thank you.
Awesome. All right. Well, Sam, let's start a little bit with your background, what got you into stablecoins. Just tell us about your journey and why you're kind of now one of the, I would say, prolific thought leaders on stablecoins. What brought you to your passion around them and how'd you get here?
Yeah, so there's a couple of stories that intertwine to make me so excited about stablecoins, but the high level note on me is like I was an engineer for 5 years. I did distributed systems at Microsoft. I still sort of think of myself as an engineer. I went to MIT's business school thinking I'd start a company around my research, but I ended up at the Boston Federal Reserve Bank working on their stablecoin initiative. And while there, I saw sort of it opened my eyes to what stablecoins could be, and I was working on some projects where I had to work with like traditional payment rails, and they were just like so embarrassing. Like what a bad platform to program against as an engineer. And so when I started full time at A16Z, it became the thing I felt was the lowest hanging fruit to begin investing in to really change the world. Like, can we bring better money to market, which is so close. 2 years ago, we could almost taste it. Now it's actually here. Um, and it affects everyone. Like, to some extent, if you're an American, you're probably paying a 2% tax on everything you buy. If you live out of the country, you don't even have access to dollars. There's a lot of room for us to have a huge area under the curve and affect a lot of people with a way better product. And so, yeah, it gets me fired up.
Love it. Now, our usual icebreaker we do on this podcast is to tell us about your first ever experience with stablecoins. Now, based on what you just shared, was that at the Boston Fed? Do you remember the first time you actually saw or used them? And like, what did that feel like?
No, I had used them before that. I had there's a few I'd used them a few times before that. One was on a trip to Argentina where I was just sort of like playing around and trying to get a sense for what the Argentinian money changers are like. And but that wasn't the first time I did it. I think it was probably like 2018, 2019. I was playing around a little bit with like the very earliest parts of DeFi and trying to get a sense for what stablecoins could be. But I guess mostly it was from 2023 onwards that I started to really get a better sense for how they can and should be integrated into both DeFi and TradFi.
Nice. Love it.
Yeah.
And now let's talk a little bit about stablecoins in the context of your work. So, of course, you're an investor on the A16Z crypto team, which you
Yeah.
guys as a team, span all aspects of the crypto industry.
Yeah.
So, day to day, how much of your work is specifically stablecoin focused, and how do you think about investing, in this asset class that inherently is stable, where you as an investor are looking for opportunities to, to benefit from the growth of stablecoins?
Yeah. Okay. So cut me off if I run on too long because I have so much to say about this. Um, I probably have seen, 150 companies in the stablecoin space so far this year. Just in the winter alone, I was really taking notes because that was the beginning of the stablecoin wave. I saw 30 or so stablecoin companies that were doing remittances, so consumer-facing cross-border payments, and they were all growing like 10% a month. So that's an unbelievable sign of enthusiasm to see that much growth. Um, Going into the spring, the narrative expands. We start to see stablecoin L1s, orchestration becomes another hot topic, cross-border payments, especially corridor specific and focusing on the B2B scenario, become a little bit more popular. And then this summer, there continues to be a lot of focus on L1s. We've seen all these corporate blockchains, like Stripe is launching one, or rumored to launch one. Circle is rumored to launch one. And so just a ton of enthusiasm to talk about how we invest. Well, yeah, we're not investing in specifically stablecoins. Those are designed to be stable. But there's so much infrastructure that's needed to bring stablecoins, which are already better money, to parity with what I would consider to be table stakes payments functionality in the traditional payments world. And that gives us a tremendous number of opportunities. So that's privacy, that's faster, better. It's identity, it's compliance, it's lending, it's It's streaming payments, which is sort of a more forward-looking payments thing, not just table stakes payments, and many more opportunities where we're excited to make investments.
Nice. And one thing you talked about there is the concept of stablecoins is better money. And I've seen you write about this and talk about this before. Now, there are sort of a number of dimensions on which one could consider better money, whether it's speed, enabling new use cases, the list goes on. To you, what specifically makes stablecoins better money, and what components are you most excited about when you think about that as a concept?
Okay, so there's three things that make stablecoins better money. So first are the two obvious ones. It's faster and it's cheaper. And so nearly instant, nearly free, that's a huge deal. There's very few payment rails that are like that are open loop. Open loop meaning anyone can pull up to it and begin to program against it. But there's another thing about stablecoins that makes it better, and that is that programmability. It's permissionless programmability, which means that I can take my stablecoin wallet and I can attach it, I can compose it, I can bring it to any app that someone develops, and that's going to allow fintech applications or financial ideas to spread across the world globally, where before we had to have banks or other trusted and regulated parties sort of roll those out slowly through legalese, bureaucracy, and consumer products. Well, with stablecoins, we can have instant lending available anywhere in the world. We don't need to go to a trusted U.S. bank to do, I don't know, create a market structure around credit card receivables. Instead, we can just bring that same product across the world, really greasing the wheels of capital markets, but also not just the financial products that we think of as being so financialized, but also totally new use cases like linking payments to loyalty or doing streaming payments in a way that wouldn't be cost efficient today. So that programmability piece is what really takes it to the next level. But on day one, we already have global, nearly free, nearly instant, making it better money on day one.
Yeah, I love it. And so you talk about those things sort of like conceptually in terms of some of the opportunities that we have for stablecoins. Now, I want to make this a little bit more crystal clear in terms
Yeah.
of use cases, both perhaps, existing ones and also ones that are coming in the near term. Do you have any, if you want to pick like one or two favorite use cases, whether it's something you've seen or something that you see we're just on the cusp of that are coming that, you as a consumer tomorrow could say, hey, this is something I'm using stablecoins for that distinctly wasn't possible before?
Okay, so there's so much happening right now that I don't even know totally where to start. But let's just say in the spring, I wrote a piece called The Month That Fintechs Embraced Stablecoins. And so you can go read that. But the point I'm making in that piece is now, because of the efforts of MasterCard, Visa, Stripe, and I think MoneyGram, many other fintechs, you can now take a stablecoin balance and spend it nearly anywhere because you can spend it with a MasterCard or with a Visa card. You can take out cash. And so one of the things that's really changed in the last 6 months is that stablecoins, Better Money, this new platform for money, are kind of backwards compatible with general like merchant acceptance with B2B payments because you can always take your stablecoin and use it at the point of sale using this Visa card that's backed by stables, for instance. So that just happened, and it's a huge deal to make it easier for people everywhere to adopt stablecoins. One of the things that's happening now, though, is we're getting way, way, way better on and off ramps. And this is a huge story. It's an underrated story. Stablecoins have been around for, 7, 8 years, but it's really only in the last 2 years that they've gotten a lot of concerted recognition, and only in the last 6 months that we've seen fintechs pick up the story, and only in the last 2 months that we've had the beginning of regulatory clarity, and there's a lot of rulemaking that still needs to be done. But what's happened over the last 6 months is that on and off ramping has dropped from being 5 or 6% fees down to 1 or even 0% fee. That really allows people to integrate stablecoins into their life without being worried about facing a tax as they enter the stablecoin world or leave it. So I think it's going to give consumers a lot of reassurance. And the last thing that's just much more futuristic, now I'll sort of maybe get to the more exciting stuff that we might see soon, is that we're already seeing on the venture side, people coming up with scenarios that really would have been prohibitive to develop using traditional payments. And so the classic one that keeps coming up is, can we do micropayments? And micropayments are an idea that have been around for ages, but it's getting much more interesting when people want to pay an AI agent for the tokens they're about to consume, or when they want to send their electrical company a payment every day to get a reduced fee rather than paying at the end of the month. And that's
Right.
something that the electrical companies are interested in. So very small, very frequent payments is one of the most exciting things that we're seeing begin to get more and more popular among entrepreneurs.
Yeah, and it's so interesting as you talk about on and off ramping, and sort of the near term emphasis that people have on that, right? Like when I speak to people in the fiat world, there's always the question of, but how do I get my money in and out? Because I need to be able to get my money out so that I can use it in the real system. But
Yeah.
then when you paint the picture of those micropayments and your electrical bill and things like that, that eventually will ultimately just be done on chain. It's like this on ramping and off ramping problem that's being solved today pretty effectively. I think ultimately is just going to get smaller and smaller in terms of scope and attention as
Yeah.
more and more of the stuff happens natively on chain.
That's my perspective. And I'll just add one thing. And this is a little bit of pushback I have against that feedback. How do I get my money out? Well, like people use Venmo, people store their money in a couple of banks. And over time, you end up with a level of connectivity between these different applications that makes you get comfortable with the fact that it's not out or in, it's where is my money and what do I use it for in that place. When I pull it into Venmo, I split bills with friends after drinks. When I have it in my bank account, I that's where I collect my salary. Maybe it's where I pay my credit card out of. When I have it in stablecoins, that might be, well, it could be where I do all those things because it's easy to split a dinner with stablecoins. It's easy to have a credit card backed by stables, but it might be where I do my micropayments out of, or it might be how I do loyalty or creator rewards or other things. And it'll just be another place that I think of as being the home for my money.
I love it. Is this where we do it? Is this where we ban the terms on and off ramping once and for all?
Well, I mean, look, ramping connectivity is an important topic, and it's just a little weird that we have like a specific term for one type of connectivity that's not going to matter in a year or two. But that's where we're at in the cycle. Like the same way. I mean, just as things become more ubiquitous, we're going to be thinking less about how we get from A to B because we're going to know how to do it. We're going to be comfortable with doing it, and doing it, on and off ramping is going to get way easier anyway.
Yeah. And this is actually a perfect segue into another topic I wanted to touch on, which is the concept of the singleness of money,
Yeah.
which I've heard you talk about before. I think is really interesting because we were talking about, Venmo balances, bank account balances. We all have our money digitally in all of these different places. And yet we think about crypto and, stable coins within the category of crypto as something different. But is it real? Is it tangible? Is it true? But it's not real money. People have those types of pushbacks. How do you think about kind of this concept of the singleness of money and how stablecoins will ultimately become one and the same with how we think about other types of digital money? How do you see that playing out?
Okay. Uh, so first of all, if you ever, any of the listeners or Annika, if you want to meet me in person and offer to want to get a drink with me, just say let's talk about the singleness of money and we'll get a couple beers and we'll really dive into it. I'd like I want that 2 hour period to really dive into it. The the big question in my mind with regards to the singleness of money is what will it take for a big company, let's say Microsoft or Apple, or to put stablecoins on their balance sheet and be willing to take 10 $100 million payments, substantial enterprise style payments in stablecoins. Right now that'd be fairly hard to do. If you tried to off ramp stablecoins in that volume, or if you tried to swap between stablecoins, let's say Microsoft sort of only accepts um, you know some stablecoin, they want to swap from USDC to their own stablecoin, for instance, there might not be enough liquidity to service that, and that's a problem. We can't be in a world where, in order to accept a payment, they've got to accept 90 cents on the dollar. That just won't work for these large corporates. And so the concept behind the singleness of money is the idea that we're going to make every stablecoin from every issuer on every chain all equal to $1. We're going to integrate it into the money supply. And there's a few ways that you could do this. One is by having a clearinghouse. That's something that I've explored. I think I mentioned it in that singleness of money paper I wrote, where you can always take a stablecoin to the clearinghouse and swap it, maybe for a fee, but it'll be at par, which means it'll keep the dollar value, but you might pay a service fee. Another option is we build a tremendous amount of liquidity and a lot of connectivity, and we just sort of slowly bootstrap our way to singleness of money. That's actually kind of where we are in the fiat world. And then a third would be that issuers begin to have a standard of being able to, if you want to be a prime issuer, you're Genius Bill compliant, but if you want to be one of the serious enterprise ready stablecoins that people really transact in, you've got to be able to service those on and off ramps of even $100 million or larger payments. Yeah, so there's a few ways to solve it, but this is one of the things I think about it in terms of how stablecoins will cross the chasm to mainstream adoption. What do stablecoins need to be able to do for the largest corporates and already satisfied customers to say, I'm willing to transact in stablecoins instead of the other things I'm accustomed to?
Yeah, love it. And so shifting from perhaps the framing of, the largest corporates like the Microsofts who are going to be moving around, hundreds of millions of dollars,
Yeah.
Moving to the everyday consumer, right? And if you think about one thing we talked about earlier is stablecoin payments are cheaper, right? You mentioned you're paying a 2% tax on whatever you buy because of credit card fees today. In a stablecoin native world, perhaps that isn't true. If I, as a consumer, I'm one of, let's say the 4 in 5 Americans that has a rewards credit card today, how do I think about getting incentivized to go on chain if I can pay on my credit card and get, a few percent in rewards? If I come on chain and I pay, is that there for me? What types of incentive structures do we as the crypto industry need to cultivate in order for mainstream payment volumes in the long run to come to a stablecoin native world?
Yeah, I see a few places or a few scenarios within different geos that are going to drive the lion's share of adoption in stablecoins. And while I think that U.S. merchants accepting credit cards are one of the groups that are most incentivized to create this shift because they really don't want to pay that 2% fee, and that U.S. payment service providers have one of the largest opportunities to increase their take rate. Right now, for instance, Stripe is only getting 15 to 40 basis points, so 0.15 to 0.4% of every transaction. With stablecoin payments, they might be able to get that up to 1.5%, 3 to 10xing their take rate. So the U.S. merchants and the U.S. payment service providers are really motivated to make this change, but the U.S. consumer probably is not, because we all get a 2% discount on everything. We get a month-long loan, a credit line. And so it's going to require creative go-to-market and incentives. Like actually our portfolio company, Blackbird, is doing restaurant loyalty. And by getting really deep in one vertical, they can offer better loyalty products that outcompete just that sort of 2% rewards you might get from other credit cards. And that's how Blackbird is trying to get people to switch to stablecoins in the restaurant scenario. But for the US, it's going to be tough, and it's going to require probably verticalized loyalty solutions that compete with traditional credit cards, along with payment service provider incentives, along with merchant adoption because they prefer that rail. I think we're going to see an easier time getting adoption in countries with high inflation, where they prefer to hold dollars, and for cross-border payments, where intermediaries make cross-border payments just so slow and unwieldy in a way that's sort of hard to imagine unless you use it all the time, that they're just racing to stablecoins, and the consumer really wants in there.
Right. And that's already, of course, much of what we're seeing play out today, where some of the most acute early kind of signs of product market fit for stablecoins are, not necessarily in the US or within North America, but, within international remittances and sort of, non-US dollar or US dollar denominated financial services for those who previously might not have had access.
That's right. I think what I wouldn't be surprised by is if in the next couple of years we see consumer applications in the US that like allow you to pay for something, and you're sort of thinking to yourself, oh, that's interesting. I just went to that grocery store and there was like a shopping assistant on my phone that allowed me to check out. I hadn't used that before. I bet that kind of new product is going to be stablecoin enabled, and it's going to use the 2% margin savings to make money as that app. Like it's using that new margin to its advantage and offering a better experience. But I don't think we're going to just like start using stablecoins where I open up my wallet, switch to stablecoins, and just pay with them, because I don't have the incentive to do that. And so that'll take longer.
Yeah, 100%. And so Now we've talked about some of this sort of the potential of stablecoins and where we might see adoption ultimately, but how do we get there in the next year, 2 years, what have you? If you look at sort of the backdrop of the last couple of years, we have increasingly clear regulation as well as finally sub-second and sub-penny transactions. What do we now, with all of that foundation as an industry, need in order to make stablecoins more of a mainstream reality, whether in a B2B or in a P2P context?
So there's this, was slowly and then all at once. Like there's a certain level of connectivity that's required in order to make network effects really strong. I'm trying to think, the City Bike. I live in New York City. There's these bike docks everywhere. To some extent, like I loved City Bike when it was just getting started, but it got so much more useful when I knew I could reliably find a dock just a minute from my home or a minute from where I'm going. And the same is true with Venmo. I need to know everyone's got it in order for it to be useful. With credit cards, we sort of take it for granted now, but basically every merchant in New York accepts credit cards, and so we're seeing the adoption among the people who are most negatively affected by today's system. So people are paying really high fees to do remittances, but they want their family to have money in whatever their home country is. People who are doing international business with people they trust and really like, but there's a 7-day or a 5-day window where the correspondent banking system is taking 5 to 7% of the money sent. Those people are switching to stablecoins today. And then eventually, as enough businesses get familiar with stablecoins and those early use cases help improve the quality of the wallets, the on and off ramps, the tooling, the compliance, the identity structure, people experiment with different UX. We're going to start to see that enough people have touched stablecoins that receiving them isn't intimidating, and the network effects are going to do that classic hockey shape that VCs love to see.
Yeah, I think that's spot on. And I want to now nerd out for a quick minute on something else that I've seen you write about, which is around the impact of treasuries as stablecoin collateral. So, of course, today stablecoins are one of the larger holders of U.S. treasuries, but still stablecoins are fairly small in terms of the context of the overall U.S. money supply. When that sort of inflection point that you mentioned starts to happen, and stablecoin supply is not 300 billion but 3 trillion. What happens to treasury yields? What happens to stablecoin structures generally? Do we as an industry need to change how we're thinking about designing these things? I think you've done a lot of thinking on this, and I think it's not being talked about enough. So I'm curious to hear your perspective on how that will play out.
I have to admit, I've done a ton of thinking about it, but I don't yet feel confident in what will actually happen. And it's an area where I'm really looking for perspectives. So if anyone feels like they can, they've got an opinion on what will happen, I can describe again the scenario, though, which is that there's about $7 trillion in U.S. debt that is genius bill compliant. So high quality liquid assets with basically treasuries with a sub 93-day period. And so there's about 7 trillion of those. Stablecoins currently account for something like 300 billion of those, so something like 5%. What happens if they climb up to 15, 20, 25%? There's a lot of ramifications that you could sort of imagine happening, but the market's really flexible and really adaptable. And my guess is that some of the things that'll happen are that the U.S. starts issuing more short-dated debt to soak up that demand. Another is that we end up seeing more three-way repos. There's a few facilities that could begin to crop up. I'm not sure. I think it'll be a really interesting question. One thing I am really excited about, though, is that stablecoins are going to lead to a lot more access to dollars, and dollars backed by safe U.S. debt. And so that's sort of my overriding thing, is like we're basically putting treasuries in the hands of more people, and that's just about as good of collateral as you can get for everyone globally who's struggled to access inflation, low inflation collateral or assets.
Yeah, no, I mean, I saw you asking the question, and I thought this is a really interesting question that we in the stablecoin space are not discussing enough. So we wanted to make sure to touch on it with you.
Thank you.
Before we wrap.
Yeah, I mean, please reach out if you hear of anyone who's like thinking about it in a sophisticated way. It's not an area of expertise, but an area I'm really curious about and watching closely.
Yeah, awesome. Cool. But before we wrap up, Sam, any final words you want to share? Anything you're excited about in the back half of 2025 for stablecoins generally? What do you want to share?
I think that everyone should pull out their phone and buy a stablecoin, send it to a friend, and have them use it in some well tested, well known DeFi protocol and get the feeling of paying a small fraction of a cent and then earning that money back over the course of just days. As in, you get this like interest that pays back, whatever the cost to send was. And you get this like really tangible, visceral feeling of I controlled that money and I moved it through the system myself and I earned money with it in a way that you're just so detached from your money when it's in the banking system and you're not really like doing anything. It changes the way you feel about permissionless, self-custodial digital money where you're not interacting through an intermediary, and it's a powerful thing. And so, I don't know, try it. If you haven't tried it recently, try it again because it works a lot better today than it did just 6 months ago.
Love it. And I will make a personal call out that if anyone listening wants to do this, hit me up. I'll help you through it. I love working through this with people. And yeah, hand by hand, we're gonna onboard the world. That's how it goes.
Yeah, and hopefully, make all payments everywhere work better, be faster, be cheaper, and have a more sort of global connected economy.
Indeed. Thank you, Sam. This has been awesome. If people want to find you, where can they find you to learn more and read your writing?
I'm at Sam Broner basically everywhere. SamBroner.com, and then I'm on a16z crypto.com. You'll find my profile there also.
Awesome. Thank you again. Great conversation. Have an awesome day, everyone.
Thank you.